I know what they say, money can't buy everything. Well, maybe so, but it could buy me a boat. Oh, yeah, it could buy me a truck to pull it. It could buy me a Yeti 110 ice down with some silver bullets. And it could buy me a John Deere tractor. This is a very familiar symbol in my neck of the woods out here in the farm fields of Valparaiso, Indiana. And right now, it's taking it on the chin. If we look on over at the Deere, hello, down $24 bills today with concerns of, impending recession, things of that nature, or maybe capital expenditures, including big expensive tractors, are not on the docket. I say, hey, this could be one of those overreactions we like to get into. It's definitely risky, and none of this is ever investment advice. In fact, it's barely entertainment. But I think I might make a little play on the Deere, ticker symbol D and the E. So our friends over at Alpha Spread right here, they say that Deere has an intrinsic value of $515 bills, under valuation of 27%. Even on a worst case scenario, it's at 326. Well, we don't want to, let's click off of that. That just made me nauseous. So we'll stick on that base case scenario right there. Currently trading at 374.69, 373.39. So it is down 6.1% today. And then over at Zacks.com, Zach Morris, his friend Slater, and the Screech over at Saved by the Bell, they have their own website called Zacks.com. And believe it or not, you haven't know how many times I've clicked on the Zacks to see what they say. And normally it's right here at 3. They're saying it's a 1. It is a strong buy. So we're not going to buy it today. Buy. But we are going to look at the options. Let's look at the Deere, ticker symbol DE. I was looking out just 9 days out. So 9 days out. And down here, where's that 1 percentile you like? Well, we'd be pretty much over the 1 if we went at the 365 strike. $4 would be the credit. And that math, if we went here, it's a big price stock. So it's going to be $36,500 collateral put on the side. Ooh, look at that. That's a big bid and ask spread. Let's see. What is the open interest on this? 59. That's not a big number, is it? John Deere, where's all your fans at? Where's all the trades? Can we go $4.10 and get some action on that, Jackson? So right now it's saying it's a high likelihood to fill. Let's go with, can we get 420? Can we hit 420? 420, still on the light side of the bid ask. So we might be able to get that filled right here and right now. $420 and $36,500 in collateral. Let's see if we can't fill that cash secured put right now. And there it is. Let's look at that math, including, drumroll please, the Fantasyland math as well. We like that Fantasyland. Let's clear that out and see where we're at. So we made $420. That went right into our pockets today. I can immediately turn that over to my wife, and she can buy, some lipstick and some Starbucks, things that she might need, necessities. How many lipsticks does she have? Don't even ask. Don't even ask. It is an entire drawer full. So there's $420, and then we divide that by the collateral, which is essentially the investment, $36,500, and that gives us roughly 1.15% return in 9 days. So, the fantasy math then goes to divide by 9, carry the 2. So divide by 9, that is our equation to then multiply based on the number of days in a year, which is 365 days. Fantasyland math has that play at 46.6% return on capital. And of course, the reason is because the risk is right in our face. Because as we speak, we're trying to, are we catching a falling knife, or are we going to get run over by one of those tractors? Deere seems like a pretty safe play, don't you think? In fact, if we go to John Deere and we look at our old friend, the dividend yield theory, I haven't checked this out, so this could blow up right in my face. but I should have probably checked that out before I hit record. So if we look at the current yield of 126, okay, what is the average yield over the past 4 years? And that would show us that it is at 136. So our synopsis, now again, these numbers aren't up to date. The trailing 12 months and the forward yield aren't up to date because the stock is down so much today. So that is what is creating our current yield. In fact, we can double check their math to make sure they're spot on simply by taking the $5 right there. Okay, $5 bills. 5 divided by the current price of 373.19, 373.19, and that equals 1.3%, 1.33. So they're not up to date yet on their equation because the trading day is still happening before our very eyes. So at this valuation, you'd be at 1.33%, and the average is 1.36%. So that tells us that currently Deere is overpriced. But what about at 365? Yeah, let's do that number because that's what we would be entering at. So if we take the $5 bills and divide it by our entry price of 365, we'd be at 1.36, which is under, correct? No, it's spot on the 4-year average. So that it means that was a bust. That demonstration was a bust, but it shows as well that Deere is a very safe company as far as dividend safety, revenue, etc. So they're showing a D plus on the cash dividend payout ratio, which basically tells us that they're not paying us a lot of money or return, but I'm fine. They're good. They're good to us. And you see all the greens. Total debt to equity, we would dig deeper into that. That's the trailing 12 months debt to equity on Deere. All aboard on the John Deere train. We couldn't click through that, so we'll just keep rolling here. And when is their ex-dividend date? So they had at the end of March, okay? So we don't have any dividend to be concerned with at this point affecting the price. But we do have to keep an eye on that because it's another trade that we could easily get out of going forward. If Deere bounces tomorrow or the next couple of days, then we can close out by the contract closed and keep the profit. Just as if we look at Valero that we entered yesterday. Where is that Valero? There's our 10 puts on Valero. And it's already up $880, 66.1% in one day. And that's because it was down arbitrarily yesterday and has bounced back a bit today, up almost 5% to 133.80. And our put contracts are at 118. So we did collect $1,330 for doing so. And we would have to spend a roughly $450 to buy those back. So, I mean, we could buy it back right now and still have a nice profit. We'll probably let that ride through tomorrow, maybe even through Friday before we buy that closed. Hopefully the trade continues to go in our favor because we like when the trades go in our favor. Let's take a look at the SPY before we close out. 407.28, the current number. It was just at what? It was at 407.64. We did not enter a SPY trade today. Nothing felt comfortable. Nothing felt attractive enough to take on risk. So we skipped today's trade on the SPY, but we do have a number of moves on the board today that I'm excited about. Amazon, and now we have John Deere. What other trades did we make today? Oh, our Citigroup, we were able to roll that successfully. The Amazon, the SPY, that was yesterday. So we haven't made a whole lot of moves today, but we did put some dollar bills up, didn't we? So we have nothing expiring this Friday as it currently stands. Let's take a look at Blackstone. Is there any interest in a short-term play on Blackstone? just like a 2-day expiration. That might make me too nervous because we do have a lot of exposure to Blackstone already. If I was going to make it, I should have made that move when it was in the 79s, because you see what it's done today. It was as low as 79.37, 79.37, 79.46, 79.52, and now it climbed all the way up to 81.01, 81.10. It's made its way back down to 80.56, but I'm not sure there'd be enough action in there for us to take on that risk on a short-term trade just for fun and profit. So 80.55, how many positions do we have? We have 15 contracts on the table, 5 at 78 that close on April 14th, and then we have 10 on April 21st. I feel good on both of those still at this moment, because I think Blackstone can turn green as soon as tomorrow. Can it turn green tomorrow? Let's see what we can do if we tried to make a short-term play. Oh, tomorrow's Thursday, isn't it? You lose track of time when you're having fun, don't you? Yeah, see, I'd have to go to this 80 strike, collect $53 on $88,000 collateral. Not willing to do that, but if we looked a week out, what would we look at to get that 1%? It'd be right around 76. So we're going to go ahead and just leave Blackstone alone at this moment, because we got to protect our 78. And of course, we've got our 72. Is that the following week? Where's that 72 at? Must be yeah, it's the 21st. Just talking out loud with you, my new friend in stocks, dividends, and options. Make sure you are indeed a subscriber to the channel. Click that like button. Hey, you want to hit that notification bell? Do that as well. Make sure that you leave me a lovable comment. That helps the the R2D2 algorithms on the channel, on the Wealth Snowball channel. Looking to add more subscribers, share the fun, share the excitement, and maybe a little bit of, the word wouldn't be wisdom yet. Eventually it will be. I will become wiser and wiser as my time in stock options and dividends continue. I promise you that. I will work hard to do my best to share anything and everything that I learn as we go along together on this journey, because the journey is to $10,000 in passive income in dividends and options, $10,000 a month. So that is our goal. We've done pretty well so far this year. In fact, I'll share in the next video current updates for March 2023 to see how we ended up with the dividends, options, and interest collected from this particular brokerage account. So thanks for tuning in, and I will see you in the next video.